Good morning, everybody. Good morning. Good morning. Good morning, everybody. Just getting my chart set up here this morning real quick. Sorry about that. I was running a little behind. Good morning. It looks like we're moving up here again pre-market. So, all right. Good morning, everybody. Hope everybody's doing well. Good morning, Trading NWA. Thanks for joining us. Not sure I've seen your name before. Saw Shank. Thanks for joining us. Appreciate it. We'll let everybody file in here one more minute, then we'll get going. Good morning. All right. Good morning. Okay, let's go ahead and get started. Looks like some more people will be filing in here in just a minute. So, all right. Thanks, everybody, for joining us. This is Michael coming to you from Game Edge on Thursday, January 22nd with our pre-market prep session. As always, we'll cover those three pillars here at Game Edge: sentiment, structure, and trend that form our trading plan for the day. So let's go ahead and jump right into it. Market trend model based on the tick index. The bolded white line is your intraday instantaneous CT. We discussed that it was a significant downtrend yesterday, and we actually cut into the colored ribbon. So this turned off our mechanical portfolios. Test, I see you. Acing 523, thanks for joining us. So again, our mechanical portfolios were turned off as of now. If the bolded white line rises above the colored ribbon, then that will turn our mechanical portfolios back on. That will be an end of day status. So then it would turn it back on for Friday for entering positions, those mechanical portfolios. But the first step to transitioning from a downtrend of sellers being in control of the overall market back to an uptrend and the buyers being in control is crossing these shorter term moving averages. We've crossed two of them, but we'll be watching that third one intently to see if we get back above that. And then we like to see the railroad tracks start flipping in the proper order and stacking to the upside, indicating we may be resuming a further uptrend in the overall market. So we'll be watching this. And then we'll look at our market or trading view market trend model here in a few minutes. So that's heading into today, still in a downtrend. But as I spoke yesterday, I thought we were at an inflection point testing this colored ribbon. We were either going to test it and move back to the upside, or we're going to start slicing through it to the downside where we could see a further pullback in the overall market. All right, moving on to our market trend model. Again, this is the ARCX. Good morning, Will. This is less sensitive. This includes it's a quality tick. So basically, it will not move as fast as the tick US, which is down here. You can see the tick US responded into the afternoon very quickly. This includes all the exchanges. So started crossing back above these shorter term moving averages. So if you're looking for a signal to start doing some progressive exposure, at least on a short-term standpoint, you got that towards the end of the day yesterday when we crossed back above these moving averages. The RCX obviously is a little bit slower to indicate that, and that's why we use that for our mechanical portfolios. So we'll really see how we handle this today. Do we continue to the upside on the tick US, and then we start seeing the moving averages stacking in the proper order, or do we see some sort of failure? The key point I like to see is I like to see us making higher highs on the tick as the spot price continues to move up. So right now on the ARCX, we're really at that high point. So I'd like to see that move above this high point with appreciating SPX price as well as the overall market. So again, this just is indicating we want to be on the right side of the market. We're in a significant downtrend. and we're trying to turn the Titanic back to the upside. Again, it takes, it's not instantaneous, so it'll take a few hours to days, depending on what your overall trading plan is. All right, let's look at the SPX, largest, most notional value options complex. So SPXA, we separate that. This is the institutions, and this is the February expiry. So we're call dominated now on the SPXA. Again, transition area is extremely wide. We want to get above the 69.45 level for significant price appreciation towards 7,000. I think we're roughly at 69.20-ish. 69.25 here, and that's a key area that we're watching on the SPX 0 DTE. And so we'll continue to look at this as long as we're within the transition or above the transition. And this is obviously the DEX transition. This is the GEX transition, or at the very least above 6,900, we give an edge to the bulls. That's the bottom of the transition area there. Implied open 69.12 or move up 69.25. But we're actually at the virtually 0 point. We talk about this net GEX. So this could go either way, depending on where you're at within the overall structure. Bulls would like to see this significantly positive on the net GEX into the tens of thousands instead of just at an inflection point or 20,000. And then obviously if you're a bear, you'd want to see us drop below the overall transition areas and start heading back down towards the 6,800. So watch this. Call dominated as of now, though. So supportive on pullbacks. Unless we start getting below the transition areas, then we'd be a little bit more cautionary and a little bit more bearish on this heading into the February expiry. All right, moving on the SPXA delta balance. I usually don't show this chart, but I think it's key for positioning for people positioning longer term. Again, this is separated in the right-hand plane and left-hand plane. So your left-hand plane is the red dotted line. So you're well above the 0 line, indicating bulls are in control, supportive on any pullbacks, call dominated. You see the right-hand plane was actually dropping below 0. So that was their out of the money speculation. Now we're back above 0 with a positive slope. So again, this is indicating out of the money speculation to the upside, which is a positive for the bulls. And then you see this continue to stay above 0. This is into further expiries. Obviously, February expiry would be here, and then on out in time, further months. Obviously, this is not indicative of what's going to happen 6 months from this time right now. Positioning can change, but that's just a projection. So again, improving right-hand plane is good for the bulls. Out of the money speculation, SPXA, and then it entrenched in the money calls below us. As we were discussing really last week, even in a pullback with the overall market, we were not seeing this fall apart. Fall apart would be the left-hand plane continuing to drop down towards 0, right-hand plane staying under 0 and dragging the aggregate delta balance down towards 0. We were not seeing that even in the overall pullback in the market. Again, you can see here, we were not seeing the delta balance drop below 0. We were just seeing it back and forth, and then started to improve again. So we're not looking for a large pullback in the SPX, overall, unless this sentiment structure continues to change. All right, moving on the SPXP, again, highest quartile heading in today. We're call dominated. Net GEX is 4,000. You see the overall transition areas here, a little bit wider on the, used to call it the full expiry, but now it's the upper quartile expiry, as we have 77% of the OI here included. So as long as we're above these transition areas, we give an edge to the bulls. Obviously 6905, 6900 there is the confluence of the P-trans on the GEX and DEX transition. And then you see 6950 to the upside. That's the PGEX level. And then you see COI actually all the way up there at 7,000. So we still have out of the money speculation to the upside. Bulls are alive and well. Everything looks good. Pull back to 6850 would still be bullish. We see that would probably overall stabilize the market. And then once we're below 6850, we'd be a little bit more cautionary for a pullback down towards 6800. So that's our if-then levels and our transition areas. As we always say, transition areas matter. And if we're above transition, we give an edge to the bulls. Below transition, we are a little cautionary and give an edge to the bears. All right, moving on the SPXP delta balance. So we spoke about this yesterday. I wanted to see, sorry about that. These are interactive charts here at GameEdge. So we wanted to see this continue to improve. Good morning, CH. Wanted to see this continue to improve. So this is our right-hand plane. This is our out-of-the-money speculation. Obviously, with SPX price appreciation, you want to see the out-of-the-money speculators come in, supporting the move up in the overall complex, which you are now and above 0. And then projected on out in time, we see the speculation continuing to rise into next week. Now, we are pretty certain of what's going to happen into Monday, Thursday, Friday into Monday. But again, it's just kind of like the weather forecast that we're seeing across the country now. Here in East Tennessee, we went from 12 inches of snow to possible ice to now possible all rain. So projection on out in time is much more difficult. But shorter term, we have a pretty good handle of what's going to occur. But this is on out until like next Friday. So obviously that is still in the area where we could see some significant shifting in the overall structure into next Friday. That's why we'd like to do shorter term overall looks and be certain of what the structure is at. So this is telling us the right-hand plane is continuing to appreciate, obviously into the 26th, into early next week. Delta bounce is staying at 1, but then we see a short drop in the delta bounce. So if you're playing SPX, we'd look for appreciation into possibly the early next week, and then possible weakness into midweek next week. And that's how we would play this overall structure. So again, you see that left-hand plane start to drop. That's out of the money put speculation come in, dragging the delta balance down. So again, could be short-term weakness in the middle of next week, but we're pretty sure that we'll have positive price expectancy into Monday, Thursday, Friday into Monday. And that's what this is overall saying. You can see the left-hand plane, again, has a positive slope, right-hand plane positive slope, and the delta balance almost back at +1. So that's what we're seeing across the board in the structure. All right, let's move on the SPXP GEX ratio. This is like a put call ratio, but we got a time component, which is gamma. So this is weighted to short dated call versus put gamma. We talked about 0.5 being that area where historically we see a bounce in the overall market. Discussed that pre-market yesterday. Go back and look at our pre-market prep. And we got the resultant bounce in the SPXP. Now, I'm not saying it always happens when we hit 0.5, but we're reaching an extreme on the moneyness, basically, where out of the money puts are reaching an extreme. Historically, we see a monetization of those out of the money puts that drives spot price up. I'm closing those puts. My book is getting less short or more longer. The dealer book's getting more negative. They have to buy to hedge. We see the result in spot price appreciation. And then if we see a drop in volatility, Vanna will help us. And we can see out of the money calls come into the complex to the upside, which we're seeing on the delta balance, what I just spoke about here, that drives spot price higher. And basically we're seeing all three of those components come together yesterday to drive our spot price higher. You can say what you want about the news coming out from Davos, but a structure is a structure, and how market participants are speculating helps drive spot price. It's the tail that wags the dog. Now, could that be because they feel better emotionally or psychologically about what's coming out in the news? Absolutely. But the point is, when you have the mechanical closing of puts, opening of out of the money calls, it's going to drive spot price higher. And that's what we like to look at as the structure. And we can understand that it's quantifiable and we can have an edge with that. So that's what we're resulting in seeing. I said yesterday, we're at an inflection point on the market trend model, inflection point on the GEX ratio, and we could have a possible bounce in the overall market. And then we get the overall bounce, right? So again, projecting, forecasting, we're not saying absolutes. We're just looking at the data we have from our back testing and historically knowing what is happening psychologically with the overall market. We say moneyness matters, but that's where we're at. And that gives us a quantifiable edge and trading plan of if-thens. If then starts to happen, then we're going to do this. If this happens, we're going to do this. So we have two responses ready to go, plan A, plan B, and we just execute without emotion. And that's what we did yesterday. So then now we're seeing back to that, we're above 1 on the overall GEX ratio, but we do have a negative slope. So that's a little bit cautionary, yellow flag there, but we're back above 1. That's the theoretical balance point between calls and puts, and we're at 1.0067. So again, technically we can give an edge to the bulls, but we're splitting hairs here about where we're at. So this could easily drop back below 1. What I was talking about into next week with this overall delta balances, we're seeing a rise. We think that we're going to have SPX spot price appreciation, but we could see some weakness into the middle of next week, and that could come to fruition with this GEX ratio also. We can see the GEX ratio drop back below 1. That would be indicating that out of the money calls are taking some overall profit. Out of the money puts are coming back in, and we would see the resultant hedging to the overall downside. That's the left-hand plane. You'd see that out of the money puts come in, and we could see that with the GEX ratio also. So again, just something to keep an eye on. And again, this could shift back to the upside, and this could repair itself into the middle of next week. And that's why we say forecasting, plus 3, 4, 5, 6 days out is much more difficult than shorter term. And we like to do shorter term, Monday to Friday on the SPX, Tuesday to Friday on the SPX, because we have a much better handle of what's occurring within the overall structure. All right, moving on the SPXP net stat command. Again, high sensitivity levels. This really is a key tool. I posted significant commentary yesterday. It played out very well, moving above these, what we call transition points. The key point here is at the forced spot price we're at 69.13, and we're well above that spot price now. In the projected spot price at the open is this is shifting to totally call dominated. So totally call dominated is supportive on pullbacks and speculation to the upside. The only part that would be the headwind would be out of the money call charm. You can see it here, and that would be at 68.20. So if we flip from out of the money calls to in the money puts here, that's an important transition area also. So we'll be watching that if we're below that level at 68.20. Okay, so we'll watch that. But as of now, spot price projected is that we will be call dominated on the delta to start, and these are transition points. So these will be where you go from out of the money calls to in the money puts. That's 68.92. That's well below where we're at. But if we get a pullback, that will be important. If we go in the money puts, then that will again weigh us down. And then here 68.50. Where in the money calls go out of the money puts below 68.50. That's why I talked about a pullback to 68.50. As long as we're above it, would be stabilizing. But if we're below it, it would probably lead to a little bit more bearishness. And then across the board on the charm and gamma, and then net Vanna, huge net Vanna to the upside if we see volatility drop and out of the money calls go in. You see the integral 4.1 million to 6.5. So again, this could be our tailwind. And we talk about where that changes out of the money calls to in the money puts. Again, at 68.20, that's well below where we're at. So Vanna tailwind most likely is where we're going to be at. And 69.85, if we did get above 69.85, we'll have a large tailwind on the Vanna side that would drive us towards 7,000. Again, not anticipating that today, but understanding where these transition points on Vanna, 69.17, where we go out of the money puts to in the money calls. So if we drop below 69.17, that would be important. Also, if we're above 69.17, we transition from out of the money puts to in the money calls. So again, that would be a supportive type area on Vanna, also tailwind. So again, just understanding what is happening at these transition points and where you're at within the overall structure and complex, and where, as we talk about moneyness matters, where do we transition from in the money calls to out of the money puts, or out of the money puts to in the money calls. And this is key because this is where you're supportive. And I use this in air quotes, resistance or supply and demand areas are based on the option structure and the Greeks of what's happening through the day. Obviously with charm, if we tick through the day, what is happening above us and what is happening below us, as well as gamma, those high sensitivity points, those peaks, where as soon as we cross it, can cause a large peak in spot price and appreciation, and then as well as Vanna. So, all right, moving on, the SPXP 0 DTE, and then we'll get to individual equities. You can post in the chat if you want. Again, call dominated to start the day, 7,000 net GEX. So we're not really at a balance point there, which is good, fairly well entrenched on the bullish side. You see our drunken sailor range. This is where we could be extremely choppy, but if we're above 6,900, we'd give an edge to the bulls, and that would be up towards 6,920, which is where we're stalling pre-market. That's our PGEX level. And you can see the charm where it comes in overhead, as well as the negative net delta, really up towards 69.40. That would be most likely the cap on price, unless we see how the money calls start coming into the complex with our intraday volume command and speculation to the upside, and then drive us up towards 69.50, which is the top of our expected move for today, 1%, 72 points. To the downside, transitions areas are going to be vitally important and key to staying above 68.75. The bottom of transition here, 68.60. And then I talked about 68.50. If we pull back to 68.50, this could be an opportunity to get involved on the long side if the MTM is not falling apart, structure is not falling apart. But again, if we're below the transition area, we'd be a little bit more cautionary. But you see stabilization type factor here with positive deltas here, gamma, and not necessarily as much influential, but significant positive charm because of the overall structure. So again, we would anticipate 68.50 to be supportive, and we watch that very intently as we head in to the open. All right, let's go on now. GameEdge.us, come join us, newsletter. Put your email in, be delivered on the weekend, free newsletter, as well as our GameEdge Fast Pass, free courses, flagship options course, all free, as well as other 2 courses. And then check out our blog posts. We reference these in our X posts. Again, like and subscribe on X and YouTube. Again, significant education here in short educational posts. These take 3 to 5 minutes to go through. Wheel strategy here. This is our mechanical strategy, as well as our P-Trans to PGEX strategy. You can go through all of our tools and how we navigate the SPX option structure. So thanks everybody for joining us. If you're done with the overall presentation there, that's fine. If you want to go through individual equities, I'd be happy to do that via our web app. and show you how we systematically look for individual equities and tickers and how we plan our trades. So looking at Hood heading into Friday, thanks Shawshank. Call dominated, 154,000 OI, so decent here. Hood 109 is your peak X level, significant. That's the highest sensitivity speculation level. So I anticipate us not to go above 109. Let's look at the top quartile. Top quartile, 109 is still your peak X level for the top quartile, call dominated. So supportive on pullbacks, but I would anticipate us not going above 109. Structure doesn't advance significantly. Actually, this expiry, it does. So the key takeaway here is after this expiry, the structure does advance up towards 120. That key level of 109, 110, you'd have to get above. And then I think you have the opportunity to price appreciate there. So Hood looks good. Just depends on what the structure continues to look like, as well as what the market trend model continues to do. CRM, yep, absolutely. CRM, let's do quartile. Put dominated on CRM. You see the next two expiries are not in the top quartile. It's really just the monthly. Looks very weak on CRM. Not really much to say about that. Let's see. Yeah, very weak on CRM. Put dominated. Structure is not conducive of price appreciation on CRM. So hopefully that helps. Hopefully you're not in CRM, or hopefully you're not looking to take a position in CRM. INTC, this Friday, call dominated, 55 to the upside, high speculation sensitivity level. Absolutely, Shawshank. Looks good there. We'll look at Meta in just a minute. Next expiry jumps to 60 on INTC, so structure continues to advance. Call dominated is at the quartiles. So the next two OIs are not in the highest quartile. The highest quartile structure here is at 50. And you're well above that. You're well above transition. So INTC looks good. I'm going to say for this Friday into 55, the structure advances up towards 60, but I'm not really sure about appreciation up the way, all the way up towards 60. But you do have a runway there. So INTC looks good on pullbacks. Meta, let's look at Meta. Call dominated, highest quartile. Everything looks good on Meta. Spot price 610. You're within the overall transition there, though. Structure is not as well defined to the upside, even though we are call dominated. You have PGX up there at 700, so speculators there. PGX 630, but you're below transition on Meta. Put dominated for this Friday, so that's a little weak. Structure really doesn't improve much. You see 650 move up, but you're still put dominated and below transition. So Meta, not as conducive as some other stocks that I would look at and try to be in. It would not be one of the first stocks that if the market trend model changes to the upside that I would go for. We like to look for call dominated and stocks changing. We have 3 scans, new call dom Del, which is call dominated Delta, and transitioning, as well as a few other scans. And those are the stocks that we really like to hone in on. And we can talk about that scan if you want, but okay. J&J 220. PGX, call dominated, everything looks good, but appreciation's probably, 220 looks like the cap on price on J&J. Top quartile, 220, call dominated, supportive on pullbacks, but 220 is a major overhead area. So ASTS and RL. ASTS call dominated this Friday, 115 to the upside looks good. You're within transition, so it could be a little choppy. 130, 115 to the upside. So 115 and you're above transition. So the structure actually advances. 115 to the upside on ASTS looks good. Top quartile. Actually 150 through, but that's, that's way on out in the middle of June. But you have speculation towards 150. So ASTS, probably continues to the upside. Everything looks good there. RL, we look at RL. RL, it doesn't have enough OI for us to look at. So sorry about that. All right, let's look at where we're at. Pre-market, okay, hovering around that 20 level. You can see obviously coming into 690 on SPY will be important. And then 625 overhead on Qs will be important also. So, all right, thanks everybody for joining us. As I said, like and subscribe on X and YouTube. You'll be notified when we go live, and at GameEdge.us. And as always, manage risk, and we'll talk to you later. Thanks, everybody.